Good afternoon, Sarah, and thanks for having me. Yes, I think the situation is changing every day, and we have to deal with unforeseen circumstances around the world. But at this moment, I'm happy to say that all our plans are working and that all our route to markets are working fine. Every day there's something that comes up that we need to adapt to. But so far, so good, and I feel very good about our people around the world that keep our factories running, that keep our distribution centers working, and our sales forces that make sure that our products are on the shelf around the world. So yes, it's bumpy, but so far things are very good for us, I would say.
Yeah, I mean, we're hearing the same from Campbell Soup we talked to yesterday, from Coca-Cola. What are people doing right now when it comes to your products? I think of them as more indulgent snacks, Oreos, Nabisco crackers. Is that part of what people are buying?
Yes, for sure. I think in moments of anxiety and stress and nervousness and uncertainty, it's normal that consumers will go to some comfort food like biscuits, like chocolate. So yes, we see an increased demand, a strong demand for our products. We know that the consumer is buying more. We see that pantry loading, we call it, in the US, very clearly that has happened. But also in Europe, we saw an increase, and in other places around the world. We also know that then at home, the consumer is consuming more of our products. So I would say that for our categories, and we know historically the snacking categories, that they fare well when things get a little bit rougher, a recession coming, or a consumer not feeling that well or that great about the future. Snacking does well in those circumstances.
Dirk, with that in mind, do you think that the performance for you and for your sector will be similar to what it was in 2008, 2009, or is this a very different type of crisis that may in fact benefit you more than then because of things like stockpiling and rushing to buy certain foods?
Well, it's very early to tell. But at this stage, the consumer staying at home and consuming more at home certainly is benefiting our categories. We see a diminishing of the out-of-home consumption, as you can expect, but that is more than compensated by the in-home consumption. Linking in with the question that Sarah asked, it's all going to depend on these supply chains, and I don't think there is an issue with the supply chains not being able to supply what's needed, but will we be allowed to continue to supply? That is probably the bigger question. That's something we didn't have in 2008 and 2009. So it's difficult to make a comparison, but I do think that from a basic consumption, the need for the consumer is certainly there.
Dirk, you've got such a global perspective with the majority of your sales outside of the U.S., including in India, which I know is a key market for you. 1.3 billion people have to stay at home there. How's that going to impact society and the economy there and your business?
Yes, I mean, India is a country where people live outside, like in many tropical countries and developing markets. So just the task to keep everybody at home is an enormous task, I would say. But this Sunday, they did I would call it a test run, and they did quite well. And I think that has emboldened them to do it now for 3 weeks. It's clear that that is one of those disruptions I was talking about that comes upon us every 24 hours. So we have to quickly adapt. On top of the fact that people really live outside, it's an economy of a lot of small stores in many cities around the country that need to be serviced on an ongoing basis by salespeople and trucks. So I would say at this stage, it's a little bit feeling our way through this and see how this is going to work. Obviously, if everybody has to stay at home and only essential goods can be sold and distributed, that's going to have a major impact on the economy. And I'm expecting that also our business will be affected a little bit in the beginning, and after that we will find ways to adapt to that.
Really quickly, Dirk, in the markets, commodities and currencies have both been wild along with the stock market, and they both affect your business in terms of raw materials, of course, and those overseas sales. How does it look to you versus other sort of volatile periods in history as far as what that's going to do to your bottom line?
Well, first of all, we don't live hand to mouth. We hedge on our commodities, and I would say for this year, we are more than covered and even a part into next year. So what we've done on commodities in the recent fluctuations is use the downs to protect ourselves more. And so we feel pretty good where we stand on commodities for next year. We've done the same with exchange rates. Obviously, over time, particularly in developing markets, those exchange rates will play a role in our costs, and then prices will have to go up. So we will have to see, and we will have to live with some price increases in developing markets in the future. But on the other hand, I think on the commodity side, we feel pretty good.
Dirk Van de Put, thank you very much.